Hi everyone, welcome back to Be Rich. As you see, today is Thursday evening and I look the same as yesterday. Like I said yesterday, I've done a batch videos and I've recorded a whole bunch of them together, and hopefully you guys are sticking around and did find yesterday's Charlie Munger interesting. Today I want to talk about something all of us want in value investing as an investor, which is cash flow. We want consistent cash because when we have consistent stream of cash coming in, we can take that money and invest it. So, how can we create this? Achieving consistent, automatic, and recurring cash flow is essential for financial independence. It provides the freedom to pursue your goals without worrying about regular paychecks. It's very true. Imagine you had regular funds hitting your account, which you can count on without worrying about. Then you don't have to worry about your job, don't have to worry about your salary, you don't have to worry about investing because it's there. So, what is it? Hard work is the key. Most people who attain financial independence through passive income put years of hard work in it. Please remember that. You just see the results, and those results look stunning. Like we always see the transformation videos, especially post-pandemic. It's all over YouTube and Instagram, where you see a guy who was looking like me, like a roly-poly fat man, and suddenly in the next clip in the video, he's looking like the Rock Dwayne Johnson. But they forget it's taken him 2 years or even more to get there. Trust funds, lotteries, and gamblings are, I don't want to say expectations. Everyone has expectations of a trust fund, lottery, and gambling, but unfortunately, those are the exceptions, not expectations. So, what do we focus on? We focus on working diligently to generate this passive income. There are 3 pillars of consistent cash flow, which I want to talk about. To achieve this consistent cash flow, these 3 pillars are crucial. First pillar, initial lump sum in rupees. Starting with a lump sum of money is essential. It should be a substantial amount, ideally anywhere between a lakh and 50 to infinity, adjusted for individual circumstances, of course. Cannot have infinite cash flow. The sum should be in liquid cash, not tied to any illiquid assets, not needed for any immediate expenses. It should also appreciate over time. Remember what I said. Start from a lakh and 50 upwards to your circumstances and individual need. You should adjust this. The sum shouldn't be in liquid form, and you should not have tied to anything illiquid. What is illiquid? Land. You cannot say, sir, I have 1.5 lakhs ready to, but then it's in the form of a piece of land. I can't do anything with that. Or it is a piece of gold. Yes, you can borrow against gold. I'm sure I have my trolls down there saying, sir, you can take gold and you can borrow, you can do this and that. Yes. So I'm talking about liquid cash, and it should appreciate over time. So I'll give you an example now. Starting with 20 lakhs in liquid savings account. The interest paid out for this 20 lakhs in terms of a bond would be your first pillar, where you can have this interest coming to you. It can be a monthly interest, it can be a quarterly interest. So this can be calculated to create a cash flow. The interest will be paid to you. This 20 lakh could be interest starting for something as paltry as 5% annual return that can generate 1 lakh per year, around 8,333 rupees a month. Or you can go upwards. If you find a good debt instrument, a bond, you can get somewhere between 9, 10, even 12 if you're very lucky. So you can do the maths. I don't need to do the maths. I'm sure all of you have a calculator. You can do 20 lakhs at 12% annually and see what kind of monthly cash flow this will generate. And this cash flow which generates to you comes every month or every year, can in turn be reinvested and put into the stock market, mutual funds. So something as simple as taking 1.5 lakhs, or my example is of 20 lakhs, and you plug it into a bond, and that gives you a return, let's say, of 10,000, 12,000 rupees. And then you take that in turn and plug it back in to a mutual fund, which is against the Nifty 50 or any other form of stocks which you feel like buying directly in the market. Over a long period of time, this kind of compounding will take place, and this will create your wealth. So the next one which I want to talk about is a ton of work. Achieving consistent cash flow isn't effortless. It involves dedicated work upfront to set up income generating systems. This can include investing in dividend or paying stocks, which not a great believer in, because when you have a dividend paying stock, you forego growth of the company. You can only have either one or this, either this or that. If you want the dividend and you want high dividend payouts to be given to you, then don't expect the company to grow. A lot of you do this, where you buy a high dividend company, yielding company, and you're like, oh sir, but I bought this and the share price is just going down here and there. It's not really growing. It's been so many years, it's not going anywhere, but you're enjoying the dividends. and you don't factor that in because you've already eaten it and not reinvested it. So keep that in mind in doing high dividend paying stocks. Another one, if you already have this, if you're blessed to have some property already there, yes, renting property rentals can be a good source of cash flow income. But if you don't have properties, what do? You have other things you can rent. All of us have equipment in the house which we don't use. Lend them. You probably have laptops and computers in your house which you don't use. Sell them or rent them. There are companies which are already doing this. They're renting laptops, they're renting cameras. Go speak to them. Give them your equipment and say, I just want a monthly return of so much. Leave the equipment with them. Whenever you need it, you can pull it out of rent, use it for your holidays or whatever your project is, and put it back on rent instead of leaving it in your cupboard and gathering dust. So think about it. There are potentials to rent things around you if you don't have properties which you do own, which you can rent. A lot of you probably have a bike. You moved on to a car and the bike is still sitting in the garage. You can rent it out. You can sell it, invest it. Opportunities are there. So explore those other income avenues. So for example, if you have invested in dividend stocks, you need to analyze the market trends and financial reports regularly so you understand what you're doing. When you're investing in these dividend stocks, make sure these companies you pick, you're just not purely based on dividend. Some of you get this closed mindset where you think, okay, the company is giving me 12% dividend. Don't bother looking at the rest. Don't do that. do the fundamental analysis which you've always been stating and repeatedly saying. Just because the guy is giving you 12% dividend doesn't mean you should throw your money in. We famously spoke about the Chinese bank, shadow banking sector, where Shashwat told the example of a lady who had put $500,000 into a shadow bank. Nor did she get her interest, nor did she get her principal. All she got was her life threatened at the end. Same way, it's a classic technique a lot of companies which are very sick do, which offer high dividend yield, but the company is very sick, and you throw your money in as an investor, later on to realize it's not going anywhere and you're losing your money. So be careful of that, picking high dividend stocks. For those of you who are looking for smaller sums, then traditional low return savings account may not be enough. So you have to look at alternate investment in India. And in India, the only alternate investment is, like what I said, high dividend real estate is also currently not viable in India because the real estate market is pretty much come to a grinding halt in India. Not only is the real estate sector sick, the industries which are allied to real estate is also very sick. So I would not advise you to right now to get into real estate, even if you have a lump sum money. I get a lot of you on Instagram coming to me and saying, sir, I have 50 lakhs, I have 40 lakhs, should I buy a flat? I can buy it outright. And I'm right now currently in Dubai. Someday I want to have a house. Right now I thought I'll buy it. Don't. You can invest that money, like I said, in other instruments, other means and methods like debt instruments, and get better returns and wait for the real estate. Even if it was your life's goal to buy a house, you don't need that house right now, right? And if you've invested that 40 lakhs wisely, by the time you need that house for you to live in, when you do come back to India or whatever, you can buy something better with a lot more money than you have right now. So that is the problem with real estate. So looking at these, options in India, right now, continuous learning is what I would advise you to do. Build on this, and maintaining passive income streams requires an ongoing effort, especially analyzing market conditions and industry trends, and adjusting your strategies is always needed. I tell a lot of people who I've met how easy it is to become wealthy is simple as riding the two waves. There are two waves which are always happening in the market. One is the debt wave, the other is the equity wave. When the debt is rising, equity will be lower. Same way, vice versa is true. So you ride the wave and jump from one ship to the other. You stay in the bond market when equity is too high, and you enjoy the interest from the bond market. When the equity corrects, you exit the bond market and enter the equity market, where it will grow again, and you'll see your growth in your investment. Same way, when you feel the market is overstretched, you pull your equities out and go back into the bond market, refuge at the bond market, and wait for the correction again. By riding these cycles, you can definitely not only triple, quadruple, even more your wealth. And each of us in our human lifetime will see these cycles at least 4 to 5 times in our lifetime. And you'll see at least 1 or 2 big cycles where you see huge market corrections. That being said, while you work hard, it's necessary to establish a cash flow system. All this is crucial, all this is very important. Do realize the most important thing in life is time, Don't spend all your time and energy chasing this and forgetting to live your life. All of us only have so much limited time on this planet. You can always make money and lose money and make money again, but you cannot get your time back. So, that being said, today I want you to remember all this. Do chase your dreams, do chase this financial freedom, do chase creating this cash flows, as I was talking about, streams of revenue so you can invest and grow. But at the same time, do remember to take a moment now and then to enjoy your life, especially on this Thursday evening, which was a holiday for some of you, I hope. Maybe it wasn't. Anyway, tomorrow is Friday. I have something very interesting to talk about tomorrow for entrepreneurs, that is. So if you're an entrepreneur, tune in tomorrow. We'll talk about business and how to do business and how to make some money as we head into the weekend, long weekend. Thank you for watching the video today. Do subscribe and turn on the bell notification icon as always. And I'll see you on the next one. Thanks.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.